avoid to get into a trade and then to find out that the market will go to the opposite direction. Okay. So like first you must understand what we call structure key levels on the market, which is supply and demand, support and resistance, and yeah, you understand what I'm saying? Those key levels on the market, they help you to spot where the market will struggle first before it will go into a direction. Okay, like on the system, what we have this here. These are support and resistance. Okay, those are support and resistance, and then we have supply and demand. Okay, so if the market goes and retests a structure key in the market, you know that it's gonna break out. Okay, but first it is gonna struggle first. Okay, you understand what I'm saying? So
man, I can't hear you. There is background noise. I can't hear you.
It's your microphone, man. Like you have company, so your company is making noise. Okay, can you tell them to? Okay, so like here, what we have here. This here we have a resistance area here, right?
Yes.
On the resistance area, if there's a buy signal for you to enter a buy, you don't just jump into a buy. You must wait for the price to break that resistance, okay? Because it can happen that price respect this resistance and goes to the opposite direction, okay? Even when you have a buy signal, you must wait. You must wait for what? For price to break this resistance. Right now, what we have here, there's a spark that indicate a break, but that one is not a break. The reason why I say it's not a break because the candle you must wait for the next candle to open above that resistance. It's the break, okay? Like this candle here, this candle did not break that resistance.
Yeah.
Right? It did not break that resistance because there's no candle that open above it. Right? There's no candle that there's no candle that open above this resistance. So this one is not a break. Okay, and yeah, you see here, yeah, this one is not a break here. A break is something. It's a candle, like you see this candle here. This one I just marked.
Yes.
That's a break because it opened below the what? The resistance there.
Yes, support.
Yeah.
Yes.
It now is no longer in support. Once it's been broken, and open below it is no longer in support, it's a resistance, okay?
Okay.
So right now, you see here, the candle what is doing there. So you must wait for what? For this 8 seconds. After 8 seconds, the next candle that will open above it, we have a break there. So it's when we take our trade for a buy, okay? You see now? Now we have our break there. It's when we can just jump into the market. And like, if you want to get into the market, what you must do is you must always look for what? For volatility, like which direction that has power, okay? How do we identify a direction that have a power? We use this, okay? This current trend predictor. As long as below price is somewhere there. As long as below price, which means that the buyers are in control.
Okay.
Okay. And one more thing, you see these signals here. Those are what are what we call peaks on the market. They extend, okay? This one they extend because they identify what we call peaks on the market, which is high and lows, okay? So the yellow lines, this yellow line here, these yellow lines, they don't extend, okay? Like right now, it shows the previous peak. It was around there. It will remain there. Okay. it will remain there until you refresh the page. Okay, like right now, you see it's there, right? It's there. It's here. If I refresh this page, it's only when it will do what? It will disappear. Because once you refresh a page, it means that you update a page. Like I'm gonna refresh it right now, you will see that it will disappear. I'm gonna refresh this page. You see that it has disappeared there. It's no longer there. It's no longer here. Okay. And let me show you another. Let me show you with another example. What's going on here? Someone is playing. Is it me? Let me shut down some couple of things here. There's something playing in the background. I think it's not that one. Guys, who's playing music here? Let me see if there's something playing.
I think it has stopped.
Oh, it has stopped. Okay. Now I'm going to show you another example of avoid being for the market to change direction on you. I'm going to show you an example with index 50. Okay.
Okay.
Here on the index 50, yeah, as you can see, we do have our signal. Guys. I'm gonna close the session if someone doesn't behave, okay? Okay, I have moved everyone. So if anyone has a question, it's gonna type, it's gonna text, okay? Or someone is making noise. Like right now on the what do we call the 50 index, we do have our signal here for a sell, right? And then the current trend is pointing down. And then we must look for what? We must look for price to open below this current trend. Now it's still attaching the current trend. It must open below the current trend. But we don't only look for those things only. Keep in mind, we have a support area here, okay? We have a support area. If we just jump into a trade, there's a possibility that the market can bounce back on that support, okay? There's a possibility that price can bounce on that support. So there's a possibility that price can bounce on that support. So we wait, even when we have a signal, we wait. We don't just jump into a trade. We must wait for price to break this support, right? To break that support and close below that the candle. It must close below that support, and then we take our sell. We put our stop loss above the current trend. Okay, as long as a small account, you don't put your stop loss above the swings there. Okay, because you'll be averaging your trade. It's like even when you are trading with 0.001, if your stop loss is too deep, you are not managing your trade. Okay, you are risking too big. You must put your small stop loss if your account is too small. The stop loss must be above this current trend. Okay, if the price breaks the current trend, it means that the market is changing direction on that current time. Okay, for example, I'm gonna add the 50 EMA to show you something. That the 50 can help you to place your stop loss. Okay, like right now, you see it aligns with the current trend, right? If the bar close this, and then the next one open here. You put your stop loss here above it, and then the market will continue to go down. Understand what I'm saying? Like for an example here, okay? We have entered a trade for a buy somewhere around there, put our stop loss here. We use the 50 moving average or the current trend. We use it to place our stop loss. Like another MT5 here, we put our stop loss here, and another fake MT5 here, we put our stop loss there. Okay? Simple, easy to use. So let's go back to the, because I know people, now I'm gonna show you how to use boom and crash, okay? Because there's too much requests on zoom and crash, right? On how to trade them. Simple, okay? Don't trade sparks on zoom and crash. Only follow the market, okay? So now I'm gonna go to, because people, they like to trade 5 minutes and 1 minute on boom and crash. So I'm gonna click on 5 minutes on boom, right? And then I'm gonna shade this screen for you. Okay. So this is boom and crash. So here I'm gonna do the same so you can be able to see. I'm gonna add the 50. Okay. What you do, you look for, it's a 5 minutes time frame, guys. 5 minutes. What you do, you look for a swing, and then once you have a signal for entry, don't enter right away. You wait for the market to do what? To close above the 50. You put your stop loss here, and then you keep on doing the same thing. Another signal is here. The next bar, you enter, you put your stop loss here. Okay, until it changes direction on you. If you have a signal like this, yeah, if there's no crossing of the 50, you don't enter. Okay, you must wait until the 50 has been crossed. Okay, you must wait until the 50 has been crossed, like here on the next bar it's been crossed. Put your stop loss there, and then you keep on riding the market. Another signal, which is this one is not valid. The reason why I say it's not valid is it did not cross the 50 moving average. Okay, it did not cross the 50 moving average. So what are we going to look for? We're going to look for this signal here for a sell. Okay, we're going to look for this signal for sell. It's when we enter our sell, put our stop loss there. Okay, guys, simple. You keep on doing the same thing. Yeah, you did it. It did meet your checklist, your requirement for take a trade. The price closed above the 50. Put your stop loss below here. Okay, so it was your buy. Even when you lose, it doesn't matter. Okay, because as long you use your stop loss, you use the 50 to enter your trade, and you also use the 50 to use to be your stop loss. Your winners are gonna be more than your losses. Okay, because here, if you put your stop loss here, you can find that you only maybe sacrifice $2 or $5 depending on your loss size. Okay, and then take a look at this, right, for this sell, and take a look at this bar. The distance between stop loss is too small. Okay, and then because this year we're not going to talk about this, because the year is a lower time frame. Okay, on the lower time frame, the market is not stable enough to identify a long-term trend. Okay, on the lower time frame, you only use a short trend, not a long-term trend. If you are going to use a short trend, the market is going to move in major distance before you can enter a trade. Now let's go back to this. I'm gonna go back to volatility. Okay, here on the volatility 75. Now I'm gonna point out this yellow line here. Okay, The yellow line represents a long-term trend, okay? The only way to identify trend is by by using EMAs. And in each EMA, it has a what? It has a time frame trend. Like example, if you're gonna use the 1 hour trend, you must use what we call the 60 EMA. Okay. Many people they like to cut it short. They use the 50, but the right EMA moving period is the 60. Okay. For 4 hour trend, you must choose the 240 to identify the trend on the 4 hour. And you can also use what? The 200. It's the same with the 60 and 50. It's the same with the 240 and 200. To define a trend on the 4 hour, you must use 240 and 200. So this EMA here is 200, or you can put it 240. It will be the same thing. So if we trade on the 50 minutes, or if we trade on the 30 minutes and the 1 hour, we must use the 4 hour as a guide for what? For our trend. Lost connection. Today the network is not stable. It's raining, so once it's raining, the network is not stable. Okay, guys. So right now, I'm gonna talk about this. All right. As we can see, that price, it has been testing this 4 hour trend for what? For a long time now. From this area, right? It's been testing that area, which is this area there. Okay. So from this distance, from somewhere around there till here, it's been a what? It's been a downtrend, right? Here is when price tested the 4 hour trend. I'm gonna add the 200 EMA. Oh my bad. I'm gonna add the 200 EMA so you can see what I'm talking about. Okay, that's the 200 EMA there, or you can just add the 240. As you can see, the price I have tested this area. Yeah, it's the same thing. Okay, it's been tested that area. Once it tests that area, if you have this signal here, right, you have that signal showing that okay, now we have confirmed that price have tested the 4 hour resistance, right? It has tested the 4 hour resistance and also respected this previous structure here. This yellow line is the previous structure, and it also respected that previous structure, and then also respected the 4 hour resistance. Now we're looking for what? For a breakout on the what? On the 50 moving average. Let's add the 50. We're looking for a breakout on the 50 moving average, which is the yellow dotted line, which is this yellow dotted line. Okay, so I'm gonna add this 50 so we can see at the past. Okay, there we have it. As we can see now, it has respected all of this area there, the 4 hour resistance in the previous structure, and then the 4 hour trend, and also respected the 4 hour trend. So we jump down to this trend monitor here. Okay, so if we have red, we know that price is gonna go what? It's gonna go down, right? And we must look for what? We must look for a close below the 50 moving average, which is this candle here. Okay, on this candle, it's a what? It's a close below, right? And then it already broke on what? This support. Now it's a 1 hour resistance. It has broken what this support. As long if you say like a resistance with a C, it means that resistance was broken. Now it's a what? It's a support. Or if you like it was a no, if it was a what, this one was a resistance, né? Because now it's been broken right now here. It tends to be a what? It tends to be a support. Okay, because it has a C there. We have our break of our resistance. We enter our trade there, we put our stop loss here. Okay, don't complain about this missing out on this move. Okay, if you complain by missing out on that move, you are greedy, you are FOMO, like you have a fear to miss out. As long as you have fear to miss out, you're gonna make mistakes on the market. It's all about following your strategy and following your rules, okay? Because there's no telling what the market will do, right? There's no telling what the market will do. But if we have rules and then we keep on following that rules, we're gonna make it, okay? As you can see for yourself here, I'm up about $110 because I keep it simple. I follow my rules. Okay, I keep on simple and I follow my rules. I did enter for a buy here. The reason I enter for a buy there is because what? Price broken the resistance, right? And then I did have my what? My signal for what? For the market is training there, but I did not just jump into a trade right away. Okay, the reason why I didn't just jump into a trade right away is because the signal that I have, it was too close to this resistance. Now it became a support. It was too close to this resistance. So there's no need for me to enter here when price is too close to the resistance, because there's a higher probability that it can still respect that resistance. So I must wait for what? For price to do what? To break out of that resistance or support. Like you can see for yourself, each and every time when there's a structure key on the market, price tend to play around on those areas. Look at this, it tends to play around on those areas. So if like you just like what happened here, you enter a trade here, right? What happened? Meet the resistance and continue to go down. So you must wait for a break. If price is too close to a resistance or support, wait for that support to be broken, and then take a trade. And then you can put like most of the precision traders, what they do is they can enter a trade here and then put their stop loss below that support there. It's not a support because it's no longer a resistance, because price is above it. Are you able to follow, guys? You can text if you want to ask question. Okay, let me show you where I entered this. I'm gonna enable the trade line reverse. You see here, I'm gonna close my sell position because it's gonna go in negative. Because I was in a sell because I was keeping on, I was talking with you guys. So like, let me close my sells. Let me show you. Okay, where are my sells? I'm gonna close this. And this is 75. I'm gonna close all of my cells. Close all of my cells. Now we're only left with buys, okay? Now we're only left with buys. These are buys. Okay, this account, guys, it's a challenge that I made. I opened this account with 70 bucks. Okay, but now you can see that it's growing. The challenge that I made for myself to test this. Okay, now you can see this buy here, it's in profit, right? Because it's in profit because I have respected what the rules for me to enter a trade. Okay, guys, I have respected the rules for me to enter a trade. As long as you respect the rules for you to enter a trade, you will be in profit. But if you don't respect the rules for you to enter a trade, you won't be in profit because you have what we call FOMO, which you have fear to miss out. Now, I'm going to show you how you can spot a change of direction on the market, okay? There are these patterns we like to ignore, which is called a head and shoulder, okay? A head and shoulder, it indicates change of direction on the market. A head and shoulder, it's where you can able to identify what we call break of structures on the market, okay? If price does this, like it was going down, right, creating highs and lows, now started to go up again. So here we have our shoulders and then we have our head, right? In order for you to identify price is changing direction, you must look for head and shoulder. Okay, this here it's our shoulder, this here it's our shoulder, this is our head. So if you have a shoulder, the height of that shoulder, it must be broken. Like by see, you can see here, this height of this shoulder has been broken. Let me try to draw something neat. This height of that shoulder, it must be broken to identify what a change of direction on the market. You can see here, it's no longer straight. It must be broken. So it will show you that the market is changing because it now created what we call, it has broken this lower high, right? It has broken that lower high. There's no another lower high again because this now it's a high. Okay, now this one it's a high. Price did what? Created a what? It created a high low. And now that high is been broken. Now price is creating what we call a high. You can see now there's no lower highs. Now we have high highs and high lows. Now you can see that the market is going what? Is going up. So if the market is going to go up, you must look for what? For buy trades only. You must ignore what? Sell trades. You must only look for what? For buy trades only. Like you can see that there's this picking here, which is a long-term trend, right? The white line here is picking there, it's a long-term trend. It's the same thing with this yellow line here, it's picking. So as long as it's picking there, it indicates now price is gonna go up. Remember that when I say that we must take trade there, look at now, it's up about 40 bucks. Because I know how to identify a change of direction on the market, how to spot highs and lows, how to spot struggle when the market is struggling on what? On the area of value, which is support and resistance. Okay, like other people, they use breakout method. Okay, if they see that the market has been struggling on this resistance plus on this support, they do what? They wait for a breakout between those two areas, right? Other people, they use 10 pips to put pending orders, they will put the pending order somewhere here, and then they put the pending order somewhere there. If the market breaks, they will do what they will jump into a trade. Okay, so pending orders are okay, but there's sometimes the market can create what we call a liquid pool, right? Like what happened here. It will activate your pending order for a sale and then continue to go up. That's a liquid pool, okay, because it triggered those pending orders and then change directions. Feel free, guys, to ask questions, okay? Anyone with a question can ask. Iman, you can ask question if you want to, okay?
Yeah, the teaching has been great so far. In fact, I've been able to learn a lot from it. But
But what?
um I would, when the market to break the resistance, and it break the resistance and the price surge high like to where it is now, can we still enter there?
No, you cannot enter there. It's too high for you to enter.
Or
You cannot enter here.
do we wait?
You cannot.
Exactly.
You cannot enter here. It's too high. Keep in mind, price it moves in structure, right? Final price it moves in structure. If it's too high, it can pull back a little bit, continue to go up, pull back a little bit. If you enter like somewhere high like this, it will pull down on you. So it will create what we call a drawdown.
Yeah.
And if you are using a bigger lot size, it can blow your account with a small drawdown. So you must wait for the market to do what?
Small accounts.
Yeah, we must wait for the market to go down a little bit, and then if it respect this resistance and also respect the this current trend, is when
Average, yeah.
you can enter there. So for you to have a safe trigger, you must wait if the market give you a sell error like this here, and you know that the market is going up right on a trend. Wait for the market to give you another error for a buy. All right, you must ignore for the sell one and then take the buy one error. Like what happened here, you see it gives us a buy error, we ignore it, and then we took this sell error. Let me use let me go back to the part so you can be able to see what I mean. Like here, we already know that the market is going up. This one I'm gonna ignore, right? We're gonna take this one. This one I'm gonna ignore. I'm gonna take this one. So can you tell your people to calm down?
I don't know, it's other participants up from here.
Okay, I mute them. Okay, it's fine. So like same here, yeah. For you to buy, you must, if you have an error, wait for the next error to come up for a buy. Okay, it's when you can join the up move.
Yeah.
It's safer to join the up move if you wait for another error for a buy to come up. To be a great trader, it's not all about taking trade all the time.
Bro.
Yeah.
I could see that all that you want us to know is to trade around the 50-year EMA.
Yeah, the 50 EMA, it's a what? It acts as a current trend to you, okay? So I want to tell you something.
Okay.
First, you must understand, okay, first you must understand candlesticks, how they behave, okay? Candlesticks, they take form according to time frames, okay? Once, if you will use the 50 or the 60 EMA, it means that it eliminates too much volatility on the lower time. Okay, because we are trading the 30 minutes, right? If you are trading the 30 minutes, it means it's gonna take 2 candles to complete what? To complete the 1 hour time frame. Because this here indicates 1 hour. Okay, it indicates 1 hour. But this time frame, it has more candles than the 1 hour. Okay. What is this noise which is playing?
So,
Yeah.
Edman, can you hear me?
Yes, I can.
So this the lower RSI.
Yes.
So how do we use this to predict to trade the market?
Okay. And RSI, it's the same with MACD, moving average. It's the same thing, okay? They calculate volatility on the market, how the market is moving, how the market is gaining volatility, and how it's losing volatility. So once we use the RSI, we must add another indicator to combine with it, okay? Because price can stay on overbought for as long as it can, okay? So don't think because price is at overbought, it's gonna change direction right away. It can stay on this area for overbought for a long time because there's not enough room for you to see that like you see from this distance here, it stayed on that area for a long time. It was on sell, 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 sell. So the best way for you to use an RSI is by using what? Is to use it as a what? As a support and resistance. Okay? Like the upper area there is resistance, the lower area here it's what? Is support. Okay? If price is in this area here, it's at the resistance area. So that's why I said sell, sell, okay? It's at the resistance area. If it meet all the requirement for you to take a trade, you take a trade. Okay? Take a look at here. It was on the support for a long time. Like it doesn't mean that it's gonna go up, but it was there on a long time, right? But we must wait for another confirmation to take trade to jump into a trade. Okay? Guys, let me tell you a secret about trading, okay? It's all about knowing correction. If you want to be successful on the market, it's by trading correction only. Do you understand when I say correction?
No.
Okay. How the market moves, it moves into 2 poles, okay? First, it has an impulse move and a correction move. So for you to take a trade, you must only trade trades on the correction move only. First, let me show you. We have established that the market is going down, right? This is an impulse move, right? This is a correction. Now we have established that the market is going down. If you want to sell, wait for the impulse move because we have already missed that one. On this correction here, on the correction, we're gonna use the correction to take a trade. We're gonna use correction to take a trade, okay? Understand what I'm saying? Like what do we have here? We have an impulse move, correction. The correction is what we use to take trades, okay? You understand, guys?
Yeah.
We
Yeah.
identify a impulse move, and then we wait for the correction. For the correction, we use it to take a trade. If you want to sell, we use the same method. Okay, right now you are looking for buys only, right? So this, yeah, this leg here for you, it's an impulse move, all right? If a correction move comes, it's when you enter trade.
Yes.
You understand, guys? If an impulse move comes, it's when you enter trade.
Well, there was a first correction, or it's a impulse move.
Yeah, because right now the system detect for you what impulse and correction, right? That's why we have what we call, we have three types of swings. Okay, we have this type of swing here, right? We have this type of a swing here. So that type of a swing, it gives us what? It gives us impulse move, right? It does give us an impulse move, and then so this is correction. So this one, there is correction. On that correction is when you enter for buy. Understand? So this one is an impulse move. If it breaks that resistance or that structure key level, we're gonna wait for what? Another correction to take a trade. You understand what I'm saying? You understand, guys?
Yeah.
It's all about finding impulse and correction. So if I use maybe a trading viewer for taking trades, what I do is, because if I analyze on team viewer, I will first identify the impulse move, and then I will draw my trend line like this, right? Let me change color for this. You see this here on this break of trend line, okay? On that break of trend line, it's when I'm gonna look for what? For what we call for buy. Right now, because the market is closed, it has broken the trend line. The reason why I will wait, because the market is close to what we call this resistance, right? Even when it says support, keep in mind, as long an area is above price, is resistance. But if an area is below price, is what is support. Now this price, it has broken it. So what I will do is I will wait for price to break what the resistance. Then it's where my entry will be somewhere around here. So what I do is, if I trade past action without any indicators at all, I'll do the same thing like this. Okay, I'll do the same thing like this. These are called patterns. It's called we have triangles patterns, flag patterns. There are so many of them, right? So here I'll identify this flag pattern. Okay, on that flag pattern, once it breaks the flag pattern, and then this candle that close above this now is now a support. It's my entry. Put my stop loss below there, because my take profit, it must be double as my stop loss. So my take profit, it will be somewhere around here. Okay, do you understand it, guys? So for this method, it requires too much experience. This one, yeah, I'm not gonna show you it. Only trade, watch what the system gives you. Okay, what you see on the system, because the system provides support and resistance there. And then another way to use the system, you can see this gray supply and demand zone there. those areas that if it's it's been retested, yeah, it said it's not retested, right? If price touches here, okay, and then it identify it as a retested area, now you're gonna look forward for a signal for you to use this to enter a trade. Okay, even this resistance here, right? If price started to respect this resistance, I'm gonna use this resistance as long price breaks what? As long price breaks what? As long price breaks this current trend. You see here, this current trend here. As long price breaks that current trend is when is I'm gonna use that resistance for me to take a sell move. Okay. Like as you can see that I have this weighted line, right? This weighted line is not showing what the market will do. No, it's showing if the market acted this way, I must prepare myself to enter a trade for a sell. Okay, it shows me that if the market acted that way, right? If it doesn't break this resistance, if the market acted like this, it doesn't break this what we call the current trend, and if here I did have an error and here I have an error again, I'm gonna buy. But if it does acted like this and breaks it, and then find out that I did have an error there, I'm gonna wait for price to do what? To close below this what? This support line, this 1 hour support. And if it goes below this low 1 hour support, I'm gonna put my stop loss above what this, because this it will turn like this, right? As long as there's a break, right? This related line, if there's a break, it will turn like this. Let's wait. Like what happened here, it was pointing down, then there was a break, and then it started to point up like that. Do you understand it? Don't mind to ask question. If you have a question, ask. If you have a question, you might ask.
Bro, your current setup, we don't have.
Say what?
Your current setup, the RSI.
Yes.
I said the RSI and the downward trend.
Yeah.
I said I don't have.
It's not an issue. You will get it. Okay.
You say?
You will get it. It's not an issue. You will get it.
Oh, okay. Okay.
You will get it. It's just like you must respect the market. Don't trade what you think, trade what you see, okay? And you must give the market enough time to develop, okay? Because it can act on this resistance, okay? It doesn't mean it's gonna go down. It may act on this resistance like this, and then continue to go up. Even when you have an arrow, it doesn't mean that it's gonna go up. So to have, okay. Oh, my bad. Even though it can act on this resistance and then you have an error for a down move, doesn't mean it's gonna go down. So what we do is we use the higher time frame as a direction, right? So this one here,
Yeah.
it's a 1 hour time frame direction because it's the 50 and the 60. Okay, you can use the 50 or the 60. Okay, and then the below one here, it's a 4 hour what? It's the 200, or you can use the 240. It's the 4 hour direction. So what we do, we trade according to the higher time frame.
Higher time frame.
Yeah, we trade according to the 1 hour time frame. So if we have an error here, we ignore it, okay? Unless it acted on the 1 hour. If it breaks this, right? The market breaks this, and then also break that support line here.
The support line.
Yeah, it indicates that the market is this lower time frame is responding to the higher time frame. It's when we enter for our sell and then put our stop loss there.
Okay. It's well understood.
Oh, you understood this one?
Yeah. It's
Okay.
well understood.
Okay, because like, you must understand time frames, which means you must understand candlesticks. Okay, because if a candlesticks on the 4 hour, it's what is developing, right? Once it's developing, it can create what we call spikes or rejections. It will create what we call opening and close, right?
Yeah.
So during those duration on that 4 hour time frames, yeah, it's only one candle though. It's only one candle, right? But on the 30 minutes candle, on the 30 minutes time frame, it's gonna be what? It's gonna be about 8 candles, okay? Because the let's see,
Eight candles.
eight
Yeah.
candles. It's gonna be 8 candles, but it was only just
And
one candle.
24.
Yeah,
3, 8, 24.
yeah. So let's see something, yeah, from this area to this area. It's 8 candles, okay? This move here, it's 8 candles. It was created by one candle. It was created by one candle on the 4 hour time frame. Okay, it was created by the one candle on the 4 hour
Yeah.
time frame. So as you can see, sometimes candle can mix up. Okay, it can be bullish, bearish, bearish, bullish, bearish. So like, turns out this candle, yeah, there were only about 2 candles on the 4 hour going up. Okay, but the market is doing what? Is going down. Okay, these 2 candles on the 4 hour here is the one that created this move. Okay, so if you can understand direction, so if we use the high time frame direction, we know that which direction we must focus on that time frame that we are using. Okay, so that's why on forex I use this okay. On forex is why the reason is why I use this. You can see here, it shows me that on the daily the market is going up, right? And then on the 4 hour it was going down, but I want all the time frame to align, right? So what I will do on forex is I'll go to the daily time frame and then align, put in this what we call a trend line. Let me remove the structure key levels. So okay, do you see the trend line that I drew for you? Do you see the trend line that I drew for you? I wanted to see something.
Yeah.
This is the daily time frame, right? How many candles do we have there? A few, right?
We have 1, 2, 3, 4, 5, 6, 7. 7 candles.
A few. If I go to 4 hour, take a look at this on the 4 hour. Do you see what's happening on the 4 hour? If I will go to the 1 hour time frame, this is what's happening. So this is what's happening on the 1 hour. But the daily, is this, right? So how I trade the market is, if I identified this on the trade on the daily, right? If the market was creating like it was moving like this on the daily, right? Let's say here there's no breakout there. I'm not gonna focus on on buys. I'm gonna focus on sells, because this is a daily. It's a move like this on the daily, right? So those moves on the daily, if I go to the 4-hour, take a look at this. Okay, so it means that the trade that I was focusing on were sellers. So what I do is I identify this impulse move correction. I look for a sell, right? Impulse move correction, I look for a sell. Impulse move correction, I look for a sell. Understand what I'm saying?
Yeah.
The key is to trade correction on the market. That's the key. If you trade correction on the market, you'll be okay. Ignore impulse move, okay?
All right.
Ignore this move here. Look for this here. This, when a breakout for this is your entry. Now here we have our impulse move, right? So on the correction of that impulse move, if you're gonna look for a breakout, the market break this, put the stop loss there, and then you take profit. Okay. What's killing people is like a greedy. Okay, don't be greedy. Avoid to stay too much on a trade. Okay, if a trade hit your take profit, get out and then wait for another setups. Okay, because what I've experienced with other traders is they can make profit and then they are too greedy. They don't take profit until the market reverse on them, and that winning trade now become a losing trade. Okay,
Yeah, it's true.
that winning trade now become a losing trade. So you must also avoid that kind of form. Because if I enter the year, right, and then my stop loss is here, I'm gonna look for
1:1.
okay, I'm gonna look for this.
Oh, 1:2. Okay.
Okay, I'll get out. I'll put my take profit there. Even when price decided to keep on going up like this, I won't blame myself that I should have stayed in the trade. As long
You're cutting what you want.
I get what I want. So now if I'm out of the trade, I'm gonna look for another buy signal. If the market could give me another buy signal, because I'm looking for buyers, right? I'm looking for buyers.
Yeah.
So if I get another buy signal, I enter again. So this method it eliminates what to overtrade, to stop you to overtrade, okay? Because if you overtrade, you won't be able to get what we call a risk to rewards, okay? A risk to rewards, it means if your account give you about 10 trades, and then you lose about 3 trades, and then you only win about 2 trades, you still be ahead, okay?
Yeah, it's true.
But if you trade about your account will give you 10 trades, and then it turns out that you trade about 20 trades, You trade about 20 trades, and all of those 20 trades were not winners. It's gonna do what? I recommend for you people to wait for clean setups and then take trades. That's why on the group you can find that sometimes I don't post signals because I only wait for what's gonna work, or if it's not gonna work, I'm not gonna check it. And then if I place a setup, I give up 2 signals. Okay, let me see on the group what we did. I give up 2 signals that there may be a probability that the market can act up like this. You see, yeah?
Yeah.
I've shown that it can, if it breaks here, it will go down because here there's what is a resistance, right? The resistance can hold, and if it breaks, I'm gonna sell it. And then I also name it, if it breaks the current trend, we sell, right? If it breaks, we sell. And then yeah, if you can buy on a breakout of that resistance. I name it there. You can buy on that breakout of that resistance. Because
I didn't understand. Yeah.
if you had a signal and that signal is close to a resistance, don't just jump into a trade right away. Wait for price to break that resistance, because it may respect that resistance and it may find difficult to break that resistance. So look what's happening right now here. You see, yeah? Price break, it's struggling to break this resistance. It doesn't mean that it's not gonna break it, but it will find difficult to break this resistance. Okay, so this resistance there is we're not gonna keep our eye on it. Okay, it's where we're gonna keep an eye on it. Then if we have a signal for a sell, we wait for the price to break this current trend. Okay, it's where we wait for a signal for a current trend. Another way to use this method is by using 1, 2, 3 method, or we can call it A, B, C. You see, this method is impulse leg and correction. Take a look at this. Yeah? If I'm gonna look for a sell, this is gonna be my A, this is gonna be my B, this is gonna be my C. You see? Impulse leg correction. Okay? Impulse leg correction. As long this leg here, it doesn't break this structure key level. So we have barriers on the structure key levels there. We have barriers on the structure key level, which is resistance and what, and this zoning. If it breaks it, it will do what?
It will go up.
It will go up and then try to retest this area here before it can go. Okay. If I were using normal candlesticks, you will be able to see break of. Let me remove this Akanashi candles. But these candles, I love them because they take away fear. Okay? They take away fear. So candlesticks like this, they show you exactly what's happening on the market. Okay? You can see now it's rejecting, right? We have about 3 candles respected this resistance, right? Do you see it, mate? I hope you gain something right now because I must go. Did you understand?
Yeah. Yeah, we understand. We understand. We
Okay,
understand.
okay. Thanks, mate. I have to go, and then I'm gonna send some of the indicators that you said you're gonna have to you later on, right?
Right.
Okay,
Yes.
okay. Take care.
Thank you very much
Okay,
for enlightening.
okay. Good. Yeah, pangalan ka. Ano yung ano? Yeah.